So let's think all the way back to last week, Kate, if we could. We were worried about inflation, what the Fed would do. What about those issues?
Yeah, I think there were a couple of things on investors' mind before we got to this geopolitical risk. Number one, as you mentioned, was inflation, particularly what was that going to do to margins? We got some good news as companies came through earnings, but it's something we're really going to be watching in coming quarters. The second was, how do companies navigate supply chain challenges? And I think that question is now even more in the air with some of the geopolitical disturbances we may see over the next couple of quarters. And the third, I think, and most important thing is how do companies react to, higher rates and a change in monetary policy. We certainly saw a lot of technology stocks derate, have their multiples come down as a result of, higher rate environment. So, these were the three major issues. I don't think they're out of investors' minds. And I think Rebecca did a great job at the top of the show talking about some of the other concerns we had even before this geopolitical issue.
And maybe just to keep going on the Fed, what's so interesting to me right now is when we think about the inflation data we got this week, core PCE, the Fed's preferred inflation measure, I think, up at 5.2%, highest we've seen since April 1983. And when we think about the Fed is expecting that it can get inflation back down to its target, 2%. In a little over a year, with only interest rates going up to 2%. So 2 and 2, basically back to pre-pandemic trends within a year and a half from current levels. And if you think historically, how much has the Fed tightened in these cycles? Usually double what we're talking about this time. So can such a modest tightening get inflation back to where it was that quickly? And I just find that the risk is skewed that we're either going to see more tightening than what's priced in, or inflation is going to settle at a higher level than what the market is discounting. One of those two things is going to have to happen. I don't think the math works right now.
So let's talk some sectors or asset classes. Kate, I'll start with you. I know you're particularly interested in software companies, software as a service, those SaaS companies. How are they doing?
Yeah. It's been a really tough start to the year for SaaS companies, David. We've called it a SaaSacre a few times, where the stock prices of these high-growth software companies have really cratered. Some of that has to do with that multiple derating, the valuation compression that I think is coming on the back of expectations around monetary policy normalization. And some of it, I think, is because these stocks so meaningfully outperformed over the last 2 years that investors really rotated away from them and towards more cyclically sensitive and economically sensitive sectors. That said, many of these companies reported in the last couple of weeks and put up extremely strong numbers and raised guidance. So I would say this weakness, David, is an opportunity for us to take a better look at either some of the cloud-based software companies or the cybersecurity and software companies.
I hope you put a trademark on that SaaSacre. I hadn't heard that before. That sounds like a keeper there. You should keep that, Kate. That's pretty good. So, Rebecca, another asset class, crypto. Because it was thought that maybe people would go to it in times of risk. It's not clear that's happening.
Yeah, at the beginning of the pandemic, people were saying crypto, is it an alternative storehold of wealth? Is it an option on digital gold? And when we think about how it's been trading, and I'm going to use Bitcoin mainly since it's the biggest one, but Bitcoin has been trading much more like one of those tech stocks. So in January, for example, as people had increasing expectations for Fed tightening, liquidity going away, got absolutely hammered. And then just like we saw tech coming back this week, in the end of the week, so did crypto today. It had a bit of a recovery. But it's interesting to think, what is driving this new asset class? Is it really an alternative storehold of wealth, or is it a form of technology? What should you own it for? And for now, the jury's still out. It doesn't have a long track record, but it seems like if you're buying it as an inflation hedge, or if you're buying it for diversification, you just need to be careful because the correlations are certainly very, very fickle.
Yeah.
One really unfair question, but I have to ask. Kate, I'll ask it of you. As we look at Ukraine, we look at these basic backdrops that are still there. You look at Ukraine. Is it going to have a long-lasting effect, do you think, on the markets, or is it going to go away and we'll get back to where we were?
I mean, David, I got so many emails yesterday saying fade geopolitical risk, and everyone wanted to rush back into the market after their first few minutes of weakness. I think it's too soon to tell. As I was mentioning before when we were talking about Europe, the real question is going to be around the growth transmission and whether or not we end up seeing this geopolitical risk, really lead to slower growth in Europe and slower global growth. And if that ends up changing central bank calculus, or whether it's in Europe or in other countries, I think that's the thing to watch. It's frankly too soon to tell that we should, whether or not the weakness is very short-lived and we should just be buying dips.
I should give you a chance at the unfair question.
Well, I agree that it's too soon to tell. I mean, again, I go back to duration and degree. If this is a long conflict, it's more likely to have a greater impact on growth, especially if it turns into a conflict that requires greater sanctions that could affect energy supplies more. So I would watch those two things. How long does it go? How bad does it get? Policymakers are not in a good place. Even if growth slows with inflation at these levels, how much can they do?
Very quickly, Kate, is the one thing that's sure volatility?
Volatility, I expect to remain elevated, at least in the near term, through the next quarter or so. Let's hope in the second half of the year, David, it comes down a bit.